Welcome to today's market report. Global equity markets rose on Monday as investors await clarity from the US Federal Reserve as to whether it might raise interest rates sooner than they anticipated several months ago, before a sustained bout of inflation. Wall Street advanced to record highs as gains for energy shares and Tesla were countered by declines in the tech sector, only to stumble slightly lower, closing the session mixed. European stocks also hit record highs following upbeat earnings reports and a surge in banking shares. The Pan-European Stoxx 600 index rose 0.71%, and MSCI's gauge of stocks across the globe gained 0.44%, as the multinational mood was supported by Japan's post-election boost and stabilizing core prices in China. Harley-Davidson Inc. shares jumped after the European Union removed retaliatory tariffs on US products, including whiskey, powerboats, and the company's motorcycles. The Eurozone bank sector touched its highest level in more than 2 years and was the day's best performer as bond yields surged on expectations the European Central Bank will hike rates next year. The Dow Jones Industrial Average rose 0.26% to 35,900 after eclipsing 36,000 points for the first time ever during intraday trading. The S&P 500 gained 0.18% to 4,600, while the Nasdaq added 0.63% to 15,500. Japan's Nikkei rose 2.61% in early trades after Prime Minister Fumio Kishida's Liberal Democratic Party won an unexpected comfortable victory, raising hopes for political stability and stimulus in the term ahead. The dollar drifted lower after posting its biggest daily rise in more than 4 months last Friday as hedge funds paired bearish bets before the Federal Reserve's policy meeting this week. The Federal Reserve on Wednesday is expected to approve plans to scale back its $120 billion monthly bond buying program, but in place to support the economy, while investors will also be focused on commentary about interest rates and how sustained the recent surge in inflation is. This meeting is going to be relatively a big deal, according to Kingsview Investment Management. We are expecting to hear the glide path for tapering the bond purchases. The market has to be on guard for a more aggressive, hawkish view from the Fed. Fed Chair Jerome Powell has said tapering would be over by mid-year 2022, which has been pegged as June, but that could also mean May. The Reserve Bank of Australia meets on Tuesday, the Fed on Wednesday, and the Bank of England on Thursday. US Treasury yields were mixed on Monday, and German bond yields edged higher, but trimmed earlier gains as investors retained their bets for 2 rate hikes from the ECB next year. ECB President Lagarde disappointed expectations of a firm pushback against the recent market pricing of 2 hikes next year, which are at odds with the bank's inflation outlook. Benchmark 10-year notes last fell 1/22 in price to yield 1.5575% from 1.5560% late on Monday, while German 10-year yields slide to yield minus 0.099%. Commodities stabilized with a further drop in Chinese core prices, pushing them 50% below last month's record high. Swaps pricing points to a better than even chance of the BOE hiking on Thursday, while the RBA will likely make some sort of guidance adjustment after again declining to defend its yield target on Monday. A survey on Monday showed US manufacturing activity slowed in October, with all industries reporting record long lead times for raw materials, indicating that stretched supply chains continued to constrain economic activity early in the fourth quarter. Oil prices settled higher on Monday as expectations of strong demand and a belief that a key producer group will not turn on the spigots too fast helped reverse initial losses caused by the release of fuel reserves by number 1 world energy consumer, China. Crude settled at $84.05 per barrel. Brent settled at $84.71 per barrel. GBP/USD is at 136.59, whilst the euro dollar is at 116.
This is today's market news. Thanks for listening. We'll see you next time.